This is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the day's schedule events for Tuesday, March 8th. Well, we already had the China trade balance for February, which showed a much smaller surplus than expected as exports really collapsed. That's not a good sign for global economic activity. Now at 0700 GMT, we get German industrial production for January. German factory orders, which were released yesterday, fell month on month in January, but nonetheless were better than expected. That raises the possibility of an upside surprise in today's industrial production figures, which could be positive for the euro. Then at 8:15 GMT, Switzerland announces its inflation data for February. Switzerland remains in deep deflation, but the rate of decline in prices appears to have bottomed. Now that trend is forecast to be intact in February as the year-on-year rate of decline is expected to decelerate somewhat. That may suggest the country has no need to lower its already negative interest rates further. However, given that Switzerland has the lowest interest rates in recorded history, it will be quite some time before the Swiss franc gets any support from interest rates. Apparently, it doesn't need it. Then at 9:15 GMT comes what's likely to be the big event of the day. Bank of England Governor Mark Carney and Deputy Governor for Financial Stability John Cudliffe testify at the Treasury Parliamentary Committee on Britain's referendum on EU membership. Now last October, Carney made a speech supporting Britain's continued membership in the EU. It can be expected that he'd repeat comments along those lines in today's testimony, perhaps with some grave warnings about what might happen if the UK votes to leave. That could raise sensitivity towards how a vote to exit the EU would affect Britain and could be negative for the pound. Finally, at 13:15 GMT, we get Canadian housing starts for January. Housing starts are falling as the housing market slows. House prices are still rising, but nowhere near as rapidly as they were a few years ago. A more sluggish housing market may leave the Bank of Canada room to ease later this year, which would be negative for the Canadian dollar. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.